couple examples. Really good one here is AMD from Friday. And I know there is some other support. The thing is, it would work as well even if there was no support here. It's just the opening price of pre-market. Now remember, if before I get into some of the examples here, remember if you do have another charting software or you're using your own brokerage, you need to make sure that you use pre-market data from 4 a.m. Okay. Uh, it's the opening price of pre-market, so it can still happen at 9 a.m. or 8:30 a.m. But in case they do market at 4 a.m. or 4:10 a.m., and that's the opening price, you need to have pre-market data that goes back that far, okay? Or else it won't work. It will not hold true. So make sure you have pre-market data from 4 a.m. And you'll see here. So AMD, it pops up, it sells off, and this is exactly what you want to look for, or a quick sell off in the morning. Okay, so it gapped up or gapped down, and then the price runs up a little bit away from the voodoo line, and it'll pull when it pulls back to it, and it's a big enough sell off. It'll bounce there. Like there's a lot of it's a heavy support area, and you can tell that there were some buy orders there, and I know that there is some other support here, but like I said, even if there wasn't any support there, I would almost wager dollars to donuts it would bounce there. And you can see that it got sucked up really well right there. So there's a couple other examples here. This is just a quick one. I do like this one because this is a lot of the times this is what will happen. Okay. There's very little pre-market trading. In fact, there's only one tick, and that was it. Okay. The opening price. And it pops up. Okay. Opens up here. It pops. All right. Sells off right to there. It tests that support and then takes off. And I know there is some other support there, but I'm telling you, I didn't dig through and grab a bunch of examples, but they're out there, folks. It's pretty amazing. So you can see there, right to the penny, that voodoo line. This one works pretty well as well. Opening price, pre-market, it rips up. It pulls back right to that area. It does dip down a little bit, but it's pretty fucking close. It's within a couple of pennies, and then it finds that support and goes. Red Hat work pretty good too. It doesn't need to be within the first couple of minutes. It will hold that support later on as well. It'll come into that voodoo line. And like I said, I didn't grab a bunch of like perfect examples. A lot of the times you'll notice it's exactly like AMD. Like that's how good this works. So that's a strategy. That's a secret. We keep this in house. We don't go around talking about the voodoo line or the magic blue line on social media. If that happens, I'm gonna have to ask you to leave. That's a breach of our terms of conditions and conditions. So make sure to keep that between us, between paying members, and that's it. That's all, folks. Hello, and welcome to the Trick Trades Accelerator Strategy, a strategy of day trading options. So, I have always had a problem with trading options. I'll just give you we'll start off with a little bit of background. A lot of people really overcomplicate options, and I promise you, by the end of this video, you'll be able to trade options with confidence and without having your eyes roll in the back of your head. Day trading options and options in general can be very confusing. I promise you, this is not confusing whatsoever. You're gonna absolutely love this strategy. It's a strategy that not too many people don't really trade options this way, and you'll see why. I don't use a lot of the same principles as the majority of options traders. I actually don't consider myself an options trader. I am mainly an equities trader. I've been trading equities for 7 years, professional full time for 4 now, and a little bit over 4 actually. Um, and options is relatively new to me. Now, before you get scared away, I've back tested this strategy, and the strategy is very sound. I actually don't know why a lot of people don't trade options in the way that I do. They really get caught up with, you've all heard these, the iron condors and the iron butterflies and uh, uh spreads and this and that, and all those strategies they're very confusing, right? So I just got to get something fired up here, but um, yeah, it's a very simple strategy, and I know you guys are going to enjoy it. So my background is, like I said, I've been a trader now for 7 years, 4 times or 4 years, a little bit over 4 years professionally, full time. And my background is I am a contract welder. I owned and operated my own welding truck up here in the Alberta oil fields for years. For as far back as I can remember, I wanted to be a welder. And up here in Alberta, for those of you that may not be familiar with it, it's it's really good money. It's the type of money that doctors and lawyers make, relative to I guess in the states. So I've always done fairly well for myself. I had a successful business, and it was hard for me. People ask, well, why did it take you so long to go full time? Well, bottom line is, it's pretty hard to give up a guaranteed, 200,000 to $300,000 income a year, right? It's pretty hard doing that. Um, so I finally just had enough of the way that the industry was headed, and I had a little bit of money saved up, and I just decided to take the plunge. If I was going to do this, I was going to do it full in, all in. And it's been a wild ride. Lots of ups, lots of downs. Very stressful at times. But all in all, I wouldn't trade it for the world. I love what I do, and now running Trick Trades. Uh, wow. I mean, I'm blown away at how good life can be as a day trader. Now, I'm not talking about all of those flashy, fancy cars that you guys see, these other guys post, but just the fulfillment that I get out of teaching people and properly educating people. That's why I opened up Trick Trades, is because there's a lot of bad information that's just nonsense. A lot of people just regurgitate information because they've heard someone on Twitter say it, or it's ridiculous. Um, but I know that you guys, that's enough about my background. I have YouTube videos and podcasts where you could check out more of my backstory, and we'll get into the option strategy. So I think, like I said to start, I need you guys to understand that this is not a traditional way of trading it. We are only going to be trading um, very basic calls and very basic puts. Now, for those of you that don't know what those are, that's fine. This is a complete strategy that I'll take you from A to Z. Okay. So we'll go over terminology and everything else. And don't worry, I'm not going to bore you to death with all of the Greeks. There's only a couple Greeks that I use, and that's it. The rest, it does not apply to us whatsoever. We're day trading these options. We're not looking to hold these overnight, although you can, and it's fine. And I'll show you something here on even Amazon. This setup right here, you definitely should have and could have held it overnight for pretty big gains. Um, so like I said, I want to point out, now I use Trade Zero as a brokerage. I'm up in Canada, and I know that it is offered in the States. It is under the PDT rule in the States. Up here in Canada, it isn't. That's not the reason why I went with Trade Zero. The reason why I went with Trade Zero is because when I first started, I was shorting pigs, penny stocks. I have no desire to trade penny stocks anymore. I find there's too many new traders that they they use far too much size and they mess up the price action because they're in too big and they get freaked out. I have no desire to trade those anymore. The market leading stocks such as Apple, Amazon, Nvidia, Facebook, Tesla, Twitter, all of it, like those traditional stocks, Microsoft, Intel, they're so easily traded. Netflix, they're so easily traded because they follow the rules. It's mainly professionals that trade them. Okay, so since that's your edge, a certain someone out there likes to have you believe that you do not have an edge in trading these higher price stocks because institutions trade them. Well, let me tell you, because the institutions trade them, that's what gives you your edge. They're so clean, they move so clean, it'll blow you away. Um, it's very easy. They're very predictable. I shouldn't say easy. That's definitely the wrong word. I don't want to put that across because, trading it can be very difficult at times, but it's about finding the right strategy and the strategies that work for you. And I do believe that you're in the right place here with myself, Pat Mitchell, and with Trick Trade. So, I do want to pull in something. Okay. Do you see all these are all different strategies that you can use as an options trader. Yeah, vertical calls, vertical puts, calendar call, calendar puts, straddle, strangle, butterfly, condor, iron butterfly, condor, and then you can customize the strategy. Wow, this is all I use. A single leg. And all that means is if I'm thinking that the stock is going to go up, I buy a call. It's like going long a stock. Okay? That's all that is. And if I am thinking that the stock is going to come down, I buy a put. Okay? And that's it. That's like shorting a stock. That's betting a stock will go down. Well, it's the same thing. Okay? So disregard all of these other strategies. We're not going to learn those because you do not need them. They're a complete waste of time in my eyes. And they do have the reasons why they do have these strategies. They are there for a reason, but they do not apply to the trick trade strategy. This is a very simple strategy that is going to net you huge gains. Okay. So, for example, on Thursday, I'll read off the gains that I made. And when I'm talking percentage gains, that's how much of my position, my money that I put in. Okay. So Facebook 250%, Apple 125%, Amazon 320%, and a secondary Apple trade for 48%. And had I held Apple just a little bit longer, I had a headache and I wanted to go for a nap, to be quite honest, it would have been over 100%. Okay. And that's amazing. That's life-changing stuff. So, if you had a position for $1,000, okay, you only put $1,000 in. On Facebook, I would have made 2,500 free and clear. Apple, I would have made 1,025 or 1,250. Okay, profit. That's all profit. That's not after we take away or after we put in our money, right? Amazon 320%. So that would have been $3,200 off of 1,000, and Apple 48%, which is $480. You guys see the potential? And that's not a lot of money in now, is it? I'm sure we all can afford to put $1,000 in on a position, especially when we're used to trading these stocks. Just one share of Amazon is over $2,000 right now. Okay. So it really puts things into perspective like that. And there are risks associated with options, but the way I trade these, it really limits risk. So, like I said, that was just an example of the potential, and we're going to go over these setups, but I think we're going to have to go over a little bit of terminology here first. So, calls, I'll go over that again. Calls. So, basically, what a call is you buy a call in hopes that the stock will go up. It's just like going long a stock. It would be like buying the underlying, okay? And the underlying refers to the actual stock. Amazon is the underlying of the Amazon options, okay? Now, traditionally, options are insurance, okay? And how you would traditionally trade them. A lot of big wigs, if they are long a stock, they will go short on the option side. It just protects them, okay? We don't trade we don't trade options like that at all. Okay. We aren't even really trading options, to be honest. I know that's a little bit of a mind melt, but I don't consider myself an options trader. It's kind of funny. We're trading the underlying guys, okay? So we're using the stock and we're using options, calls, and puts to accelerate our gains. That's why I call it the accelerator strategy, because we're not trading these in a traditional sense. So calls are if you're betting that the stock will go up, and puts are betting the stock will go down. Okay? Strike price. So the strike price is the price. You see this white line, right? Now that is from this, the 210 strike. Okay? Now for us, strike price, I mean, it's important, but it's not as important as most options traders will in their strategies. With my strategy, I'll show you how to price the option, meaning what strike price to choose. Okay, but we'll get to that. But the strike price is just the price of the option that you are looking at. Okay, and there's a bunch of different strike prices, and this will all be explained later on. I have a super simple way of pricing the option that I know you guys are going to love. It's super simple, so that's the name of the game, guys. Keep it simple and you'll be profitable. The ones that overcomplicate things, guys, they're man, first of all, I think that they do that to make themselves sound smarter than what they are. Number 2, it's because they're not comfortable with themselves. They have to, again, boils down to making themselves sound smarter than what they are. And number 3, I think they do that to have you under their thumb as a guru or as an educator. They want to always kind of keep you dumb, I guess, right? And we don't do that here at Trick Trade. So those are calls and puts, and that's a strike. Um, Delta. Delta will be important too. That's the only other Greek. That's the only Greek I use, guys, is delta. Okay. So what delta is okay. So I just want to make sure that I'm not going to fumble that up. All right. So delta is important because it'll let you know how much the option premium is going to move, meaning when you buy it, okay, and the price is 22.50, how much this is going to move. All right. So with a delta of 53 cents, that's all this is, okay? Cents. 53. Okay. If Amazon goes up in your favor $1, 1 point per share, you will make 53 cents on that price. So the price, if Amazon moves up 1 point per share on the underlying, on the stock, where you bought in at 22.50, it will now be 23.03. you would have made 53 cents. Okay, simple enough. Now we'll go over one more example. Just let me get rid of this because I have options charts all set up, and we'll just make it nice and easy. Apple. Okay, now I want to use some lower priced options just to make it really click in at how big the potential is. Okay, so Apple, if you bought the 230 calls, okay, at 155, or you would have bought on the offer, let's say at 159, okay, and Apple stock moved up 1 point per share. So it's at 227.93 and it went up to 228.93. You would make, since the delta is 25 cents, you would make 25 cents on this premium. Okay? Now, most of the time here, a lot of these, you want to try and find the higher delta, okay? I don't necessarily focus on that because I'm betting that these stocks are going to have explosive moves. So when you do that, the closer they get to this strike price, okay? So the 230 strike, right, is way up here. As Apple starts running up into that, this delta is going to increase. Okay. So a lot of these deltas, they'll go to $1. So if the delta was $1 and Apple went from 227.93 all the way up to 228.93 and moved 1 point per share, where you bought in at 159, you would have went in, you would have made $1 and it would be 259. Okay, that's how much your premium would be worth. And the premium is just how much you're paying for the option. Okay? So now when you buy an option, we'll break out a calculator here because I want to show you guys. And I know this is it's still a lot of information, although this is a very simple strategy, guys. It's still a lot of information. So just watch this a couple of times. Watch the key points a couple of times and you will be good to go. Because I know as soon as people start talking options, their eyes roll in the back of their head. Don't worry about it, guys. I really don't use Delta even too much either. Okay, so don't worry about it. So now when you go to buy an option, okay, and I'll get more in depth with this. I just want to give you guys a quick rundown so as we move forward, you kind of grasp the idea. Okay. So when you buy an option, let's say you buy the 230s, okay, at 159. You're buying one contract is 100 shares, okay? You're buying 100 shares of Apple in one contract, okay? So you got to times this by 100. So if you bought one contract of the 230, the Apple 230s, okay, and you hit the offer to get in at 159, $1.59, this would cost you, one contract would cost you $159, okay? And on that $159, that's the most you could ever lose. If this premium went down to worthless, zero, okay, and they do on expiry day, okay, you would lose $159. That's all that you can lose. But your gains are unlimited, okay? Even off of one contract, guys, you can make some decent money. Because like I pointed out earlier, my gains on Facebook and Apple and Amazon were all over 100%. So to risk $159 and then you could make double and triple that, okay? So 159 times 3 because I made 300%, over 300%. You could have made $477 just off one contract, right? Like, do you know what I mean? So it's, and Amazon premiums are way more expensive than that. So what you would have made way more on Amazon, but I think it kind of shows you that the potential is there. You can make a lot of money very quickly with options, but you got to be safe. So now how do I actually trade these? Well, I trade 4 or 5 very very basic setups. They're basic setups, and that's it. So before we move any further into the options end, I'm going to show you the trick trade setups. Okay, in order to trade options the trick trades way, with the trick trade strategy, you need to become proficient in the trick trade setups. Our strategy, our overall equity strategy. Remember, like I said in the previous chapter, I don't trade options as if they are options. We are basically trading the equity. And there's about 4 or 5 uh, setups. They're very easy setups on the equity side. So we'll get into those. But remember, in order to trade this option strategy, you must first become proficient in trading these setups. Okay. Now, that's going to determine your success. They're very simple setups, and I know that you guys will be able to do it. You have to focus and be very patient. Okay. Remember, we're not scalping pennies. We're looking to hammer points here. Okay. We look for big, big trades. That's how we roll at Trick Trade. So, first up on the list, we'll go to a double bottom. Okay. Now, a double bottom is a very traditional setup. Now, before I get into these setups and what they all are, I just want to let you know that yes, I'm a technical trader. Okay. I trade based off of technicals and off of levels and support and resistance. These setups, although very simple, there's a reason why they work a high percentage of the time. They're not going to work 100% of the time, but most of these setups will work 70 to 90% of the time. More like 70 to 80% of the time. Okay? Which is very good. The reason why they work, and it's not just because they're a technical setup, they are a psychological setup. Now, I want to get into a little bit of psychology, market psychology first before we move on, so then you guys really fully understand this. These setups work very well on these stocks, market leading stocks. Now, to make my watch list, I use the S&P 500. So I have 503 stocks that I choose from, okay? But for options, I have a basket of about 12 to 15, maybe 20 stocks that are my go-tos. Those are the ones I really trade. But I still put together an equities watch list, and I use the S&P 500. The reason why I use the S&P 500 is because they're real companies, real stocks. They're not garbage, really manipulated, just shit, right? We don't trade that type of garbage here at Trick Trades. Our edge in the markets is very simple. Our edge is based off of proper stocks working because professionals trade them. Professionals are remember now, professionals are professionals for a reason. Okay? They are professionals because they follow rules and strict guidelines. They need these stocks to prove themselves, okay, before they put in their money. Now remember, folks, professionals aren't trading with, a few hundred or a couple thousand. They're trading with tens, hundreds, even millions of dollars, okay? Like tens of thousands, hundreds of thousands, millions of dollars in one position. Okay? So they need these stocks to prove themselves. All right. Now, what I mean by proving themselves is it holding a double bottom or holding a higher low or a lower high or, you know, it needs to prove itself. This was a trade that I called out in Trick Trades chat, the double bottom on Tesla, and some members caught it for some very nice upside. Now, on the equity side of things, could have made over 6 points per share in what, about a half an hour or so? Yeah, about 40 minutes. So, this is a double bottom, okay? Now, do you see how it comes right down to the penny of this last wick? The reason why it works so well, a double bottom especially, a double bottom is my favorite setup. There is the least amount of risk and the highest potential for success. Okay? But on the flip side, it can also be one of the hardest trades to take because to make it a double bottom, the stock needs to fail. It needs to come down. It needs to retrace. It needs to go red. Okay? So that's why it's hard for some new and struggling traders to take a double bottom trade, okay? You need to trust, you really need to trust support and resistance. Okay? It's very very important that you do that. I got to get rid of this 20. That doesn't belong there. Sorry guys. All right? And like I said, the reason why it will work a high percentage of the time is because it becomes self-fulfilling. Okay. So a lot of big money, a lot of traders with, large positions, that's why you'll see a volume spike right at that double bottom, right at that previous support. Okay. So what happens is you will have either institutions and banks and bigwig retail traders and guys like us. They will risk off of that double bottom, that support area. Okay, so they will put in their orders to buy as it's coming down. They're going to bet that this is going to hold. Okay. Now, if I zoom in, you can see now, do you see how it's really hard to see? I don't know if you guys are going to be able to see it. You see my support line here? Well, do you see the bottom wick? How it's just like a couple cents just above that line? Okay. That's because traders will set their buy orders just a couple cents above that to make sure that they get a fill. Okay. This is as much of a psychological setup as it is a technical setup. All right? This is important stuff, guys. These are the subtleties. This is how the stock market truly works, really works. Do not look at these charts as candles on a computer screen. This is raw human emotion. And when it comes to emotion, human beings are the most emotional when it comes to two things in life. Okay? Women or men, so love, or money. Okay? Now it's open for debate which one comes first, but money is very important to people, and people get highly emotional over it. So these candles are only emotion. That's how you need to look at these charts, guys. All right? No more looking at these charts as a inanimate object that's on your computer screen. You need to start looking at these stocks as living, breathing animals full of emotion. Now, this can be a tough concept at first to get, but I'm sure quite a few of you that are listening to this are, I get that. That makes sense. Because it is. Money and emotion are hand in hand. That's when human beings are the most emotional. So that's why these setups work. People want to limit their risk. That's all you can do as a trader, guys, is limit your risk. All right. It's not about you know, predicting a stock's movement or anything like that. It has to do with managing your risk, and it becomes self-fulfilling. So the best price that you could get on Tesla if you wanted to go long is wait for a sell-off, wait for a bounce, a nice retracement, and then let it sell back off and let it prove itself on that double bottom. Okay? And it held, and you can see with this bottom wick, it started to get sucked up. That means there's a lot, and the volume too, right? That's a lot of volume. It bounced because there are a bunch of traders betting that this will hold. Double bottoms are pretty hard to break, guys. Okay, support after a big sell-off. Okay, after a big sell-off, it's hard to break. Okay, now, I've got it on the 2 minute chart only because I want to be able to show you guys TC2000. You can't go back too far on the 1 minute chart. I trade based off of the 1 minute chart. I want to let you guys know, but this setup still was valid on the 1 minute chart as well. Okay. So I just wanted to point that out. So that's the double bottom. All right. So when it sells off, you can mark low of day on the bounce as it comes back in, and you see it start to hold. Now, you don't necessarily need to put a buy order right at support. I'm not saying to do that. But once you see it going green and it's holding, because it's going to do one of two things right at that area. It's either going to hold or it's going to fail miserably. So once you see that it's holding, take that trade, okay? You need to trust support and resistance. You need to. It's important. It's also right at a whole number, 298, okay? It's just below that, but you got to remember it's also a $300 stock, so a few cents underneath that 298 is perfectly fine. You can see once you come up a little bit, it's right at that 298. So remember that, guys. Double bottom, it's my favorite setup. Apple, just as a heads up, Apple loves the double bottom, okay? You can pretty well get a double bottom on Apple almost every day, like almost every day. Okay, so that's the double bottom, and what you would do is you would get in, okay, on the hold of support, and then set your stop for just a few cents below this support line. If it cracks that, it could just be a fake out and then come right back up. So you just want to give it a few cents, right? You want to give it a little bit of wiggle room. Not much. Do not bag hold these things. Once they crack, just like, you know, you got to get out, okay? So that's the double bottom. So remember, moving forward, I'm not going to discuss the psychology of each and every setup, but I will go into a little bit of detail with it. But that's the psychology behind it. These institutions and these people with money, these traders with money, they need these stocks to prove themselves. And once it proves itself, that's when the buying will it comes in. You need to trust that. Okay, so that's a double bottom. Get proficient in that. And now let's go to a higher low. Okay. Now there's a couple different types of higher lows. There's a longer time frame higher low, and then there's a short time frame higher low. And Apple gives us a really nice. I'll go back to the 1 minute here. Apple gives us a really nice example of both of those. Okay, so the longer term higher low is right here. Okay. Now, like I said, Apple loves double bottoms, and if we'll zoom in here so then you guys can really see. Now you can see this bottom wick, right? It got bought up, came down, tested the 50 EMA on the 1 minute, and then came up. Now, when you put your support line across, we'll make two supports, okay? So we got low of day, And then we also have the opening price. Now, do you see where it came down and tested and held? That's a support area. That's very important. The opening price. The open is it's very key. So remember that moving forward. Okay. So Apple, once it kind of did its thing, if you miss this move, it'll generally give you another entry. Okay. Now, Apple might have faked you out a little bit on this kind of double bottom because you can see these wicks how it got bought up and then it took off, but then it kind of got stuffed down. The market was a little sketchy there on Friday. This is from Friday, August 31st, 2018. So the market was pretty up and down. President Trump had come out with some uh, tariff talk from the day before, so the market was still a little freaked out about it, a little fakey. But wait for these stocks to really prove themselves and really set up. Now, what I mean by that is you need to be very, 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 very patient. Okay, and if you're watching and stalking these stocks and it comes down to a key support level, take the trade. Take the trade. Okay, it also gave you another opportunity with another higher low. But the first higher low here that we're going to discuss is the longer time uh, higher low. Or because it is a higher low, but it is also kind of like a double bottom. This one's kind of a, somewhere in between. But regardless, you could take the trade, you could risk off of low of day, and that's it, right? So that's a double bottom slash higher low. Sometimes I'll refer to it like that, okay? Because both setups are kind of there, right? But technically, it is a higher low. And the reason why higher lows work, I will get into a little bit of psychology with this one. The reason why higher lows work is people are anticipating that the stock will keep going up. So they want to make sure that they don't miss their fill. Okay. They want to get filled on this. They know they need in. So they will start in here and then they'll add as it confirms. You can see as it's confirming, you get that extra volume, right? So traders are noticing that it's going to work. And that's because buyers are coming to a level that is higher than the previous, right? They don't want to buy down here. They want to make sure they get in. It's almost like not a feeding frenzy. I don't want to say it like that, but it's along those lines. You understand? They want to make sure because they're anticipating a big move, and it's not like it got a huge move, but it definitely did have a really nice trade in it. So, from your entry up to highs here, was 2 points per share, which is a great trade. Okay. And on the option side of thing, this was probably, 50%. We'll get into the options percentages and everything else, but I need to show you that we are trading these options as an equity. We're not really trading them. So remember these setups because this is how we take our options trades, guys. Okay. So this is the longer time frame kind of double bottom slash higher low. And then we have the short term. Okay. So we get a sell off, we get a big retracement, and then it finds some bottom. It finds a base or a bottom at some support. And we have support from the opening price, morning open, right? So as it comes down, it doesn't have the weakness to come down and test lows. This means there's too many buyers that want to get in. So it bounces. And that's why the shorter term higher low is great. Okay? These setups work amazing, guys. You got to trust me on this. If you haven't traded setups like this or anything, you got to trust it because there's a lot of psychology in it. And it's human nature and you can't get away from human nature, okay? So this is a higher low, and then this is a higher low, but two different types of higher lows. Okay. So you would enter here, take profits on your first pop. You always want to lock in, and then you kind of let the rest run. You can add in on a dip, on your first dip, to put back on what you just took off for profit, or you can just let it run, and that's fine. Okay. So that's the higher low. All right. Now you can see that Apple got stuffed right at some resistance, right? So I would definitely be getting out right here on this stuff move. Okay. It's not a huge stuff because it wasn't a ton of volume or anything, but you can see that there's sellers sitting there, guys. There's some sellers sitting there. It's right at resistance. We got time of day. It's a little bit after lunchtime on a Friday before a long weekend. It's most likely not going to go higher. That's about it. Can it? Sure it can. These stocks can do whatever they want, but so that's the higher low. Now we're also going to use Apple as another example. Now the first VWAP tag or a VWAP tag. Now the VWAP is this orange dash line, okay? VWAP stands for volume weighted average price. Okay. Now, so what the VWAP is, and I'll make this, I'll put it in layman's terms. That's how I like speaking. It's the best way to teach. So basically, what the VWAP is it's an indicator that is in real time. Although all indicators are lagging, this one it's fairly quick. There's not like a 9 EMA when it's 9 periods back, or a 50 that are 50 periods back. Like, you know what I mean? Like, it's pretty current. And what this tells us is this is almost like a line in the sand. It lets you know whether the traders on the day are either green on their positions or red on their positions. Okay? So above the VWAP, traders are happy. They are above water. Below the VWAP, traders are not happy. They are underwater and most likely red on their positions. The average trader of Apple for the day, as soon as it dipped below here, you see how it just dipped below this VWAP just a little bit? The majority and average trader that is in on Apple was red on their P&L. Once it came back up, the average or majority trader was green on their P&L. So most people aren't going to sell a large volume of their position if it's still holding the VWAP. Once it goes below the VWAP, and let's say it sells off and then retraces up to the VWAP, right? It's hard for it to come back up and go higher because there's too many people that are selling. So the first VWAP tag is something that I have a million YouTube videos on. Okay, I have a lot of material, even free material. I have members only content material as well on the VWAP. It's very, very important to the trick trade strategy. It's something that we use all the time at Trick Trades, and I use all the time personally. I love the VWAP. It's a great indicator. It actually started out as a mutual fund indicator. Some people will tell you that it started out as a hedge fund indicator. No, that is incorrect. It was a mutual fund indicator, and it has caught on in the retail market. So the first VWAP tag, now there's a couple, okay? Now you got to be pretty quick with this one. This first one, do you see how it quickly comes down? All right, and test that. Now you can get in on that, and I do. I'll see that and I'll go long because there's a lot of buyers right at that VWAP. Do you guys see? There's going to be a lot of buyers. That's what these wicks mean. It's getting sucked up. It's getting bought up. And then it pops up, and then it retraces, but then it comes back up, right? So you can take it there, or you can do it here. Now, sometimes when you see these quick dumps, especially a real big one through the VWAP, that's fine. Don't get too freaked out over that, guys, because it's almost like a parabolic move. It's exhaustion. When you see stuff like this, it'll usually do the opposite right after, and that's what it did. Okay? So this VWAP area, right? Once it dips below, it pulls basically an under over or an over under, however you want to look at it. So it goes under the VWAP and then comes back over. So under and then over. Bases for a bit and then picks its direction, and then boom, you can take it long and you're good to go. Could have caught a point and a half on that, and this would have been about probably, I don't know, 50%, 60% move on Apple on the option side, somewhere in there, depending, right? But pretty average. With these strategies, guys, I'm telling you, it's going to blow your mind because you're going to be making, on average, 40, 50% trades. 40 or 50% of your money on almost every trade you take. Okay? And you can get as high as my biggest percentage gainer is over 500%. Now that's crazy, and that's just a day trade. You can make more on overnight holds, but you expose yourself to risk, and I'm all about managing risk. So that is the first VWAP tag. Okay. Lots and lots of material I have out there. Okay. So I go more in depth about the VWAP tags in Trick Trades, right? So I just want to give you guys a general overview of our setups. And if you're interested, I would highly recommend coming into Trick Trades and getting educated, properly educated. That way I can spend some time with you and we can really go over these setups. But that's where I would take this, let it come under. You see the retracement, it pops back up, and it's just sitting there. Once it starts coming in, you see that volume coming in, take it long. So you would take your options trade right here, right, as it's coming up, and then you'd probably have to risk off these lows, right? But I really wouldn't want to see it come down underneath that VWAP again because it would most likely fail at that point. Okay. A quick little under is fine, and then it's got to come right back over. A break of support isn't scary. It's what it does after that's going to determine what happens with the stock. Okay. So that's the first VWAP. This is the first VWAP tag, but this is also a VWAP tag. This one's pretty hard for you guys to catch. I don't expect you guys to catch that one. Okay. You got to be pretty skilled and pretty fast. All right. But this one should have definitely nailed. Now we're going to start looking at some short setups. So to go short or buy puts, you're going to need a couple of setups for that. So let me... Okay. So since we're discussing the VWAP tag, I'll pull in this. Now this is just an old reference, but it's a beautiful it's a beautiful example because it gives us a couple examples. We have a VWAP tag here, but if you can see, you see this top wick, this wick on this one here, okay? That would be the first VWAP tag. Now, it's you got to be pretty quick to catch that, but there are indicators and subtleties that this is going to come down lower. So you very easily could have caught something like this. These are trades that we take at Trick Trades all the time. You can see it pre-market here. It's starting to roll over. Looks really weak, right? And then it dumps, but then it retraces and gets stuffed because it's all wick. That's a good indicator that this thing is done. She's going to pull back, so take it. Take that trade, risk on the opening price, and that's it. Take that trade. So you would buy your puts right here, and then just let it work. And let's say you miss that, okay? Now that it's based and it's come up, comes into VWAP, and it can't get back over. So take your put options here. Buy your puts right here. Take the trade right here. risk a little bit over VWAP, and that's it. Okay? And then you would have made a mint. Now, I don't trade TMUS on the option side. Like I said, I trade about 12 to 15 stocks, and that's it. But the setup is, it's pretty nice right here. Okay, now we'll get into another short setup. One of my favorites is the double top. Okay, a double top is a great setup, and I'll show you that a trade that I took personally on Thursday, and I hit Amazon for 320%. This thing went up as high as, I think it went up to like 380% or something like that, but um, no, it would have been closer to 400%. I took it off. I took it off just a little bit before the bottom. I took it off right in here. So on Amazon, you can see this double top. Okay, I'll zoom in because there's two double tops here. Okay. Okay. I refer to this as the quick double top. This is the longer double top. Okay. The quick double top it works actually really well, and I find it works well on extended intraday charts. Okay. So when a stock rips and then it pulls back and it's looking weak, like it's kind of broke trend, the 9 EMA, and it's kind of broke trend a little bit. What it'll usually do is exactly what Amazon did. It'll come up and quickly test high of day. You see how it got stuffed once it broke? Okay. Now, there's not a lot of volume on that stuff, so it's technically not a stuff. But you can see that seller's candle. I refer to inverted hammers as seller's candles and a hammer as a buyer's candle. Very, very strong signs, okay? Um, this here, when it comes back up to test highs, I usually say it didn't have the nuts. It didn't have the nuts to break highs. Meaning there's no buyers up there. For the short term, there's no buyers up there. It's not going to go any higher. Okay? And it pulls back. Short it. Short it, short it, short it, short it. Go short or buy puts. Right there. You would have got instant resolution. Now I was in on this and I set a stop, a very, very loose stop because I knew that, or I figured that. You don't want to say I know. I hate that I told you so shit, or I knew. But a fairly loose stop, and I was gonna look for the end of day sell off and the end of day panic, which is exactly what I got. So took it short, bought some puts, and then I took off to the gym. I came back home and it had retraced up in this area, and it was right in here when I got back home. So as it confirmed with a lower high now, right? So I got back home right in this area with the lower high I added, and it worked out beautifully. Right in this area, there was a Trump tweet. Okay, so President Trump tweeted about implementing more, hammering China with tariffs. Okay. Either way, I do believe Amazon would have sold off, but it really helped it, and that's why I managed to get 320% on this. All right, beautiful, beautiful, beautiful trade. Made a lot of money with it, more money than people make in months of work. Very, very impressive. Um, very happy that I've discovered this strategy. Now, don't get freaked out. You can kind of see like this double bottom type of look, right? Don't worry about that. If it doesn't get back over the 50 EMA, that's why I use the 50 EMA. Okay. Once it kind of tests that and it starts rolling over, that's it. This thing's gonna lights out. So when you take this trade, you would risk on high of day and maybe a few more cents just to give it some wiggle room in case it gets stuffed. It pops and then gets stuffed. right? So don't get freaked out if your trade idea is for this to sell off at the end of day or towards the end of day. Don't get freaked out when they retrace. See this as an opportunity to add into your position. You can get a bigger position with the same or less risk, okay? So remember that don't get freaked out over retracements. That's healthy. That's going to happen. Hold your ground. If you don't hold your ground and you constantly get freaked out, you're going to you're 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 never going to win, okay? So this was a trade that I took on Thursday, August 30th, and it was a big one, 320%. So that shows you the capabilities of the strategy. And here's the thing, folks. Almost every day, I'm taking a trade and making 100% my money. So if I put in $10,000 into a position, I'll make $10,000 free and clear profit. Now, my general size on a trade is anywhere between 10 and 20,000. Those are my position sizes. You don't need any more than that, and that would be way too much for you guys to start with. But I'm pretty confident with this strategy for you guys. I wouldn't take any more than 5 contracts. Even with 5 contracts, you can make either hundreds or you could make thousands very easily. So you don't need to take massive size, just take it easy. So that's the double top, the quick double top. Okay, I will refer to it. Okay, like in chat, I'll call out. Okay, Amazon quick double top, and everyone in chat knows that that's what I'm looking at, right? And then if I were to call out, okay, Amazon double top, that's this is the double top right here, right? It's kind of like a slightly lower high, slight lower high as well, right? Because it does go a little bit over, but I mean, we don't get that technical about it, right? So that was the double top. Now let's say you missed all of that, okay? And you saw it dump and you're like, "Oh, I missed it." Don't chase. Don't ever chase these stocks. I promise you they will give you another setup, okay? They will. I promise you they will. They will. Lower high right here. Take it short, risk on highs. End of story. It really is that simple, guys. A lot of people make trading way more complicated and way more scary than it needs to be. All right? Easy, easy stuff. As soon as it comes up, right? Even before it starts dumping, just take the trade. Just take it short and then risk on high of day. That's it. That's all you got to do. All right? You need to be comfortable with risk. And a way to manage risk is through your position size. All right. So, like I said, hit the double top on this, and I took it off in here. I could have made about another 80% my money had I held on, but I didn't want this to retrace because once it